Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, July 26, 2012. Well, the continuation of the trend to the upside today. Prior day's trading, we had establishment of that first time frame uptrend with the candle making a higher high and a higher low. Today, we've continued that trend with another higher high and a higher low and a very large white-bodied candle. The previous day we had a white-bodied candle as well, and a decent size to that. With that change of trend, it suggested that the buyers were firmly in control of the market and committed. They did test around the important 121.55 area of potential resistance, and today the buyers have had very strong outside momentum to take out that level in a very bullish way. The buyers have been strong enough to increase the size of the body of the candle in a white candle, and that suggests that there's very strong momentum from the buyers. The only problem with this market is that we've seen the two important areas of resistance, the 122.87 area and the 123.28 area, hold as resistance for this market. We actually saw downside price rejection from both of these areas, and the market failed to close above there. So moving forward tomorrow, this will be a crucial area if this market is going to rally up through there to at least the 124 area or to the 124.55 area. Prior to that, we have establishment of the swing low at 120.41, and that will be an important area of support for this market if we do see the market come off. But the 121.55 area here, if we do see any selling coming in, will hold as important support as well. Now, in terms of the prior Fibonacci extension, and this highlights well how the Fibonacci ratios can be used for timing entry and exit into this market. And here we saw the what we're examining here was the prior time the market was trending down in relationship to the downtrend prior to that, and we saw the market find support around the 50% level. So that area has held, and basically what we had to do, even though we had a very large black body candle, we were looking for a higher high and a higher low in that change of trend, and that's what we've seen. So one of the ways that you could have actually used this if you had a position, a short position, would be to lower your stop down to above that high of that candle, that black body candle that found support at the 50% level. But now that the market is in an uptrend and we're examining the relationship in terms of Fibonacci ratios of the current first time frame uptrend to the prior time the market was trending up in the first time frame, and here we see the market finding resistance around the 161.8% level. So that does suggest that there is potential for a change of trend to the downside, even though the buyers have very strong momentum. I doubt very much whether we will see that change of trend. There is a possibility we could see some selling coming in around this area. It was an important area of previous support and resistance, so there is a possibility of that, but I doubt very much that we will see that change of trend quickly. We're more likely to see some selling coming in and suggest potential for a change of trend. Just looking at the prior Fibonacci extension, and we're looking at the relationship of that downtrend that had been terminated to the prior uptrend, and here we see the market finding support around the 161.8% level. The candle prior to the candle that closed just below the 161.8% saw strong price rejection from that area. Then we had this black body price rejection from just below there, and then the change of trend. So it highlights how these relationships in the terms of Fibonacci can be very important. And looking at the current Fibonacci retracement of the prior downtrend, and here we see the market being rejected from that 100% level, and always the 100% levels will be important because it'll be the swing high or the swing low, and that's what makes that very important. And here we see that the market's tested there on 1, 2, 3, 4, 5, now 6 occasions, and we're seeing selling coming in. So it does suggest that the market will need some solid upside momentum to take out that area. Now the market does have that momentum, but let's wait and see. If we have a bullish breakout up above there, then we certainly could see the market trading higher. Now in terms of Fibonacci, we have the market maintaining the bearishness in the long-term time frame by trading below the cloud, and we've been trading below the cloud for quite some time. Here we see the bearish breakout below, which is a sell signal with Ichimoku, the strong downtrend in place in the second time frame initially, then the third time frame downtrend that we've seen here, and we're still trading down below the cloud. The market is also trading below the Kijun Sen, and we have been since the breakout down below here. So the market is bearish in that medium-term time frame, but the market has turned bullish in the short-term time frame by trading above the Tenkan Sen, and basically this is supported. The bearishness is supported by the Chikou span by trading below the corresponding price action, and there is a possibility, because of all this bearishness in the higher time frames, that this will be a retracement of this prior second time frame downtrend, and then there is a possibility we could see the sellers coming back in. So there's a possibility it could happen around this area with this strong resistance around 122.87 and 123.28, but we also have strong potential for resistance at the Kijun Sen, which is trading at 123.66 around this area here. If we don't see the market find resistance around there, there's a minor swing low around the 124 level, and then up to the 124.55, which I've mentioned previously. But certainly let's watch the high of this candle, the 123.28 level. Very strong area of rejection, and if this market is going to appreciate further, the market will need to take that out.